All right, good morning, good afternoon, and good evening, depending on where you are in the world. My name is Sophia Arendt, and I'm the Global Blockchain Business Council Senior Analyst. It is my pleasure to welcome you to the GBBC Virtual Members Forum. This is a bi-weekly webinar series showcasing the innovative work of our members around the world. And today we have the pleasure to be joined by Matthew Alexander, Head of Asset Tokenization at SEBA Bank, one of Switzerland's only licensed and regulated digital asset-focused banks, for a presentation on the role of asset tokenization in corporate digital finance. Just by way of background, Matthew is an expert in capital markets, investment banking, corporate strategy, and principal investing, with 22 years of experience in the US, Europe, Latam, and Asia. Most recently, Matthew has focused on shaping digital banking strategy and managing strategic digital banking investments for one of Switzerland's largest private banks. We, of course, welcome your questions at any point during Matthew's presentation in the webinar, so please submit them in the Q&A box at the bottom of your Zoom screen, and we'll take them after Matthew's presentation. Thank you, Matthew, so much for joining us. I will now hand things over to you to begin.
Sophia, thank you very much, and likewise, good morning, good afternoon, and good evening to everyone that's joining today. I'm just going to share my screen, so give me 1 second. I hope you can all see that. Look, I think today I have a few aims. One is to give you a little bit of background into SEBA. What is SEBA about? Where does it come from? What is its mission? What is its aim in terms of digital banking, corporate finance, and asset tokenization? We'll have some questions at the end. So I think what I'll do is jump straight in to page 1. So SEBA, we'll give you a little bit of background. So I joined SEBA in March this year. I have a history of around 22 years, as Sophia mentioned, in investment banking. And toward the last 5 or 6 years of my career before joining SEBA, I think there was a very clear realization, certainly for me and my colleagues working for some of the larger banks here in Europe, that in order to innovate and to embrace the transition from traditional banking or fiat banking to the new banking ecosystems, digital banking ecosystems, you needed to really start from the ground up and start from scratch. And this was something that the founders of SEBA realized, is that in order to transition and enable this move from a fiat and traditional world into a digital world, you really do need to have a startup mindset. You need to work with something which is purpose-built on a digital foundation with a digital architecture, but also has a balance of individuals and professionals who've worked both in technology, strategy, and banking in order to make that bridge. So I guess the positioning of SEBA is to be a challenger bank. So what do we mean by a challenger bank? It's a bank which challenges the traditional way of doing business, particularly again, as is our subject today, in corporate finance and capital raising, and to challenge new banking ecosystems, to help enable new banking ecosystems, and to provide new products and services with different features and attributes that are superior to, let's say, the old world and fiat ways of doing banking. So here you can see challenger banks. People speak a lot of virtual banks, digital banks, challenger banks. What does that really mean? So for SEBA, it's about creating solutions which are delivered at a lower cost. So something which is taking out pieces of the value chain, which can be reinvested for the benefit of clients or issuers. Secondly, it also plays a lot in the space of bringing in new investable asset classes, making those available to a broader class of clients. So private markets in particular, which is a little bit historically dominated by ultra-high business, institutional business. We can make that more accessible to, let's say, the lower client segments. Also enabling B2B solutions, and that is one of the core positions for SEBA, is to play a role in being able to provide certain capabilities, and we'll talk about that a little bit more in a minute, into digital and new banking ecosystems. So things like stablecoins, and distributed ledger, instant clearing and settlement, this type of thing. This also stretches into DeFi, so this is obviously in vogue, so DeFi, CeFi solutions, and having a regulated bank. So I skipped down to the bottom. I think that's one of the key attributes of SEBA, and it's something which is shared only by one or two other banks globally. And that is that on the one side, we're a digital native bank, able to work from our kind of digital native stack and architecture, but we're also regulated by the FINMA in Switzerland. And the license that we have is Swiss Banking Securities and Dealer License, and it's the same license that's held by UBS and Credit Suisse. So we find that that resonates very much, particularly with our B2B clients, and gives a level of security, a level of safety around the processes, the regulation, and all the great things about Switzerland in terms of its rule of law, its safety, its heritage in banking. So in terms of the market opportunity, I'll dwell on that for a minute, because just to put a little bit into context, this transition, I think, 2 or 3 years ago from fiat traditional banking into digital was something people questioned heavily in terms of timing. When is it coming? How big is the market opportunity? Where does it come first? And I think moving forward to today, and certainly in the next couple of years, you can see that transition is gaining momentum. So the transition from digital assets in terms of assets under management, we can see has already taken a very big step forward, up to around 19 billion earlier this year. And in terms of digital assets stored on the blockchain, solutions which are starting to circulate on the blockchain as well, that's also up to a pretty substantial 12 billion by 2027. I think also we can see, for example, US dollar tether and other digital currencies, which I'll mention a little bit later, that the prevalence, the use of digital currencies is significantly increasing. And on the right-hand side, if we think about Europe, which is where SEBA is playing, the European market size, in terms of cryptocurrencies, and a lot of people consider SEBA and some of our competitors to be crypto banks, and that's certainly not where we're positioning. We have certain trading capabilities in cryptocurrencies, but the significant global opportunity that we see is in digital assets. And you can see there, relatively speaking, by 2024, we're expecting around 1.4 trillion in total value in Europe in tokenized assets, compared to the cryptocurrency market value, which is around 235, 240 billion. So that's where we see a huge expansion in use cases and a huge opportunity for SEBA. So let me talk a little bit about what we're doing today. We're a relatively new bank, as I say. We're kind of a fintech startup with a banking license. So we have a lot of capabilities, and where we're looking to, let's say, invest our resources and our technology to the best use in terms of the shareholder perspective, as well as the blockchain digital banking ecosystem. We have, on the top left-hand side, digital banking services. So here we're providing to fintech companies, startups, tech-savvy corporates globally that are underserved by the traditional banks, who don't want to touch them for certain reasons, AML, KYC, which is still a bit of a stigma. We're able, given our familiarity and our core ethos, to be working in that space. We're able to provide all the traditional banking services, but also, and this is key for us, is to be able to provide fiat to digital banking services, so the foreign exchange or FX within cryptocurrencies, digital assets to fiat, and provide the so-called on and off ramping, which helps them in their ecosystems. On the top right-hand side, this is digital investment solutions. So this also incorporates our kind of trading investment solutions. So traditional products in digital form. It incorporates all of our cryptocurrencies, in which we have the 5 majors that we trade as a principal. So we're a principal versus the market and versus our clients. That also helps us create structured products and derivatives on the underlyings. And that's also where, when primary issuance within digital corporate finance really starts to come online, we offer that full suite to those clients, sophisticated investors, institutions, and wholesale through the digital investment solutions business. And on top of that, at the bottom right, we're able to provide credit services. So we do crypto collateralized lending. We lend against cryptocurrencies, baskets of currencies, and we do equity release as well as Lombard, which is a really interesting product. So coming to a little bit, again, the bottom left, which is a bit more the subject of today's discussion, is digital corporate finance. So I think here there are a huge number of opportunities to transition from the traditional way, the fiat, classic investment banking style method of business into digital forms, digital formats. And what does that take? So one thing is an end-to-end offering, providing a full service from the idea generation on, let's say, a fundraise, a capital raise, or another asset tokenization project, all the way through to design, creating the token. So there's a lot of hype around tokenization, but in the value chain, the tokenization part is really the easy bit. The underlying quality, the underlying attractiveness of the offering or the investment opportunity or the fundraising is still at its core. So managing the legal and the regulatory aspects on top of the technology, all within SEBA's regulated digital stack and supported also by custody, trading, and hopefully soon secondary markets, we're able to start playing in the whole value chain of debt and equity issuance and asset tokenization. So on page 5, what are really the key drivers for an asset tokenization opportunity or project? And how do we kind of capture that? And I think there's a large misconception about what asset tokenization can actually bring. And people think it is a little bit of a magic solution that can bring out attributes in their underlying assets or their underlying projects which are actually not there. So I think you have to be, and we are very cautious with clients about what it can really bring to them and what it takes to supply and succeed in a successful asset tokenization. So going around this little wheel on the left-hand side, so protocols, the choice of protocol, and I think we'll see in a minute as well, the most widely used protocol still being the Ethereum network, supporting smart contracts. That's by far and away the most popular for many reasons on public blockchain. But issuers will have different priorities. So if we look a little bit more into the regulated world, the traditional banks, they're a little bit more nervous about going into public blockchain and having securities issued on public blockchain, because I think the security and the transparency is not yet fully understood and not fully adopted. So here, one of the core offerings we have is to be able to analyze a use case and decide which is the best protocol to host the smart contract that underlies the tokenization use case. And here it's typically 3 things around the protocol choice. That's speed, security, and price. As I think many people know very well, a little bit of tug of war with gas prices and the general security versus price and cost discussion that's going on with the different choices of protocols and the usage of the traditional world, which tends towards some of the private and side chains versus the public world on the public blockchains, is still a process. And I think that's something which is also holding back mass adoption of digital asset solutions for capital raising. So going around the wheel on digital currencies, settlement trading. Digital currencies, we can talk a lot about how many should there be, how many electronic versions of the US dollar, the euro, or the renminbi should there be, and that speaks a bit to the question of interoperability. So if you or I want to trade in a security, or we want to buy a burger at the McDonald's, if we have an electronic version of the currency, we hope that it's accepted as broadly as possible. And that comes into the world of interoperability on digital currencies. And I just noted here the Banque de France. I think that's something which many firms, many of us are participating in, supporting and contributing to the design of electronic currencies. US dollar tether being sort of largest by far and away, around 14 billion currently in US dollar tether is a huge success story. USBC also very popular, but much smaller. And here in Europe in particular, the design and rollout of an electronic euro or electronic Swiss franc or sterling or any other has now seen a huge momentum gathering behind it. So again, 2 years ago, central banks were very reluctant to engage in the design of central bank currencies, mostly I think because of security concerns. Roll forward to today, there's about 15 different CBDC experiments going on around the world, so central bank digital currency experiments. And one of them being the Banque de France, which we're very proudly at SEBA are part of. We're the only Swiss bank to lead a consortium to participate in those experiments, and one of the very smallest that are selected to run various different experiments of digital against digital, DVP settlements and so forth. And so that's great to have a seat at that table, because ultimately, I think that interoperability can only be achieved broadly if there is cooperation. And I think that's very true of blockchain digital banking communities. We do need to collaborate more than we compete. And once we've collaborated enough that we can have a certain level of interoperability, I think that's when we can start turning into, let's say, more fierce competitors. So that's on the digital currency side. On the bottom there, the liquidity of the secondary market. That's a real pinch point at the moment, and I think that is, if you think about what's critical in many, if not the majority of digital asset use cases, it's a secondary market. So distribution of a tokenized real estate token that relies on a secondary market, or at least a reasonably broad private market, of which there are few. When it comes to highly developed and already liquid primary and secondary markets in ECM, equity capital markets, debt capital markets, etc., they're already running, arguably on a sort of digital basis to a degree. But what's missing is a native digital exchange. And SDX here in Switzerland is obviously spending a lot of time trying to bring that to life, still on a private network. There are others which are emerging. We've connected to 2 or 3 of those, one being RCAX and the other being InvestTax in London and Singapore. But the issuance on those platforms is still a little bit nascent. So when it comes to corporate finance in a traditional sense, and bringing that in a different solution to a blockchain or a tokenized solution, I think that for me is probably the biggest pinch point and the biggest open question about the success of individual use cases. But momentum is certainly building. And then the digital asset, the use case itself. So again, asset tokenization doesn't spin straw into gold. It simply brings some efficiency gains, as far as I'm concerned anyway, personally. It can bring cost efficiency. It can bring some of these things which we see on the right-hand side of the slide, transparency, actually much better security than exists today. It can bring some new features. It can bring fractionalization, and fractionalization can bring value. It doesn't necessarily bring value. And that all comes down to the use case. So the underlying fundamentals of any kind of a use case are by far and away more important than the tokenization itself. Let's move to the next slide, 6. So which blockchains, I mentioned this briefly, which blockchains are supporting the digital asset cases? So the Ethereum blockchain, of course, still hosting more than 90% of all the use case and asset tokens that are in circulation today. And so that's the natural choice. So what we have here at SEBA is primarily Ethereum, ERC20s and ERC1404s for different use cases. And I think for the foreseeable future, that will remain our kind of core business, our core focus. However, we also have access to Tezos and other permissioned Corda, permissioned blockchains, and or sidechain based private distribution networks and trading venues and exchanges. And I think what is important is to ensure that at this stage, before we sort of see any winner takes all in terms of particularly primary and secondary issuance, we need to be open and flexible. So at least from SEBA's perspective and some of our competitors as well, we ensure that what we design in terms of the choice of protocol within our asset tokenization use case is as interoperable as possible, that can be connected or can plug in via various different, let's call them adapters, into these different platforms using different protocols. But if you take a step back and if you think back to, I guess, the mission and the overall long-term goal of SEBA, and indeed I think the public blockchain when it comes to securities and digital, ultimately the distributed ledger, the open public blockchain should be all that's needed, and a centralized counterparty, which we still are today, that's regulated. I hope one day will become a thing of the past. Page 7. So in terms of the overall process of asset tokenization, I think we've seen certainly over the last 5 years a lot of piecemeal solutions. So again, there's some great products, some great players producing really pretty cool tokenization platforms and highly efficient, relatively low cost solutions for the pure tokenization side. Some of them are also connected to other parts of custody, sometimes regulated, less often regulated, mostly unregulated. And this, I think, is where it's difficult for an issuer, a corporate, for example, an SME who wants to issue a bond to raise finance through a bond or a private, an IPO or a secondary market placement. They're really missing a digital version that can take care of the design in the origination phase. They can also help with the distribution. They can trade, providing also secondary trading for derivatives and structured products. And again, the central clearing counterpart. This at the moment is a great focus. So the clearing and settlement layer is something which should really disappear in the future. So that the blockchain is the clearing and settlement. And that's a use case which I think everyone's working on within equities and funds for instant clearing and settlement. And on the blockchain that can facilitate that. And then from a safekeeping perspective, from an issuer risk perspective, you want to know that you're banking with somebody who has the right license, who has the right experience. And I think that's where, again, from a SEBA perspective, we're able to offer that end-to-end solution. And I think that's going to be very important for winning the trust of issuers in terms of digital corporate finance. Page 8, I think this reinforces a little bit the market infrastructure question. So at the top there, we have private permissioned and public permissionless blockchains. And which one's going to win? I think there's room for certainly more than one, and there are a lot of them. One thing that we're trying to do now is, again, as I said, be as interoperable as possible. So when we design a tokenized solution, it can plug in based on the wishes, the goals, or the aims of the issuer. It can plug into multiple blockchains, and that gives flexibility, and that helps distribution, and it helps the user experience. But in terms of the blockchains themselves, how we're working with them, we're helping more on a B2B basis there. So the demands that are coming from these blockchains, so Libra, for example, there are other payment networks, Tencent and others, who are really looking for the supply of stable coins, for example, payment tokens or stable coins, which we can all talk about the underpinning of a stable coin and whether that needs to be one-for-one or whether it needs to be a fraction, but that's probably another discussion as well. But certainly what's a really strong demand and something that we're supplying a lot of volume into is to different blockchain players in payments and remittance who are looking for the issuance, who are non-regulated and can't do it themselves, who are looking for a bank that's also a digital bank who understands them as a digital or a technology-focused company and can provide them electronic currency to power their ecosystems that we can hold in storage and safe custody here in Switzerland. So that's a real plus. So I think that area is really growing. In terms of the tokenization, so in the middle layer there, the marketplaces, the exchanges and trading, this is really where there's a lot of players providing some fantastic solutions, but it's still very nascent. So if I'm looking, and again, this is a little bit of the handbrake on the industry, if someone's coming, I often have the use case of a bond issuance to finance property, for example. Where is it distributed? Especially from a corporate who might have a treasury bond as well, similar but different use case. They need a digital exchange where they can distribute this token. And so far, there are a few of them. And I think when we come to let's say the two different broad segments that I could segregate, let's say, the use cases into from public markets, so traditional ECM, DCM funding on the investment side and equity side, and then more private capital raising, private markets equity, private market debt. The private market equity, private market debt, I think, is something which is gaining much more momentum much more quickly because I think in particular there's a lot of inefficiency. There's a lot more paper-based processes or steps in raising funds or issuance in those bases. And therefore, the tokenization and the blockchain solutions have a lot more fat to take out of the process, and the competition is not as efficient. So there's more willingness from a political perspective as well to start creating these ecosystems. So, you know, the organized trading facilities and multilateral trading facilities, we're seeing a lot of those coming up, a lot of momentum, and issuance onto those markets, I think, is starting to move forward, and volumes, I think, will pick up. And those tend to be a little bit more semi-private, some public blockchain solutions there, but still a little bit on the private side, but I think that will move. And then if I go back to the other segment, which is the traditional corporate finance, which is a little bit the SDX type world, I think those are such huge pools of trillions of dollars of issuance around the globe. The politics, to a degree, is obviously playing a part in creating somewhat of a headwind to transferring that already very efficiently run, profitable business for a lot of the majors out of the traditional clearing, settlement, payment networks, solutions and platforms into an alternative blockchain base, which is digital native. And that I hope will reach a tipping point. And I think that has a number of factors around it. Also, again, on the priorities of the larger wholesale and investment banks being on security. Gaining the trust, gaining the security of those firms and of their risk committees is a process and a journey, and that's going on. And I think that's where a little bit more the private market side will help create a little bit more of that demand, those solutions, the test cases, and I think that tipping point will certainly come. Let me move to the next slide, slide 9. So jumping a little bit into let's say the IPO versus the ICO market. This is some work, I think, which EY has been working heavily on as well in this analysis. This is a Swiss view, so apologies to those outside the Swiss Financial Centre, but some of these lessons, I think, are still transferable. Again, where I'm seeing a lot of demand in primary issuance is from SMEs and corporates, both on the equity side but on the debt side, where they're underbanked by the investment banks. Usually because their issuance size is a bit too small, or they don't issue as frequently. And so the investment banks either won't service them, which pushes them into more expensive alternatives. So bank debt, for example, instead of a bond, where it's the expense crossover, there's still some space to play. And on the equity side, you know, IPOs, which can be very expensive if you're a smaller company, you're a startup, obviously you need a track record to IPO anyway, but once you reach a level of maturity where you feel that you're ready to IPO and go to a main board, it's still more difficult on the IPO side compared to the emerging security token offering element. And I think the journey also that we're all coming through is moving from the ICO side, which obviously had quite a stigma. On the right-hand side, obviously, that process of raising funds without a real prospectus or proper prospectus, in a way which really left a bad taste in investors' mouths. I think everyone's aware of that. Moving into the STO world, I think we have the chance to bring this into a comparable level of security. In fact, I would argue even higher levels of security with more flexibility. So these smaller issuers can play in that market. They can build in more interesting features. And of course, on the equity side, being able to choose or select your investors. And that is also a challenge as well as an opportunity to find investors without having to go to an investment bank who charges high fees. You're relatively captive to them. You can have multi-arrangers, multi-managers, book builders, etc., who take in a lot of layers of fees. They tend to play in the higher tickets. And that level of, and that's certainly a fantastic business for a lot of corporates, but the underserved, the unloved small to medium enterprises and so medium corporates, that's where I think the STOs can come into play. And what's super appealing, and we speak regularly to CFOs and treasurers here in Switzerland and across Europe, is that if they're able to manage, particularly on the bond side, but also on the private placement side, to identify and whitelist chosen investors. They have direct insight into their investor base. They have more control. They can manage all their corporate actions from the desktop, voting, dividends, etc. Also on the bond side, to be able to put in interesting features for the treasurer or the CFO, different coupons, variable coupons over time, and just having a control and a transparency over those two types of instruments is super appealing. What's still to come, I think, to make that work, one, as I've mentioned ad nauseum, is the lack of secondary markets. But the other thing which is a little bit missing is a firm legal basis to underpin some of these new tokens and tokenized securities. And here in Switzerland, there's a CMTA law which we rely on, where we can issue a private placement, for example, which has a tokenized equivalent, which is a marker. Apologies, everyone. In terms of the legal basis and the underpinning, that I think also needs to be tested. So there is, particularly here in Switzerland, a new law coming in, which people are aware of, you've probably been watching recently, has been voted in, called the blockchain law, which this law would allow a native issuance of an equity or a debt security, in theory, on a native electronic token, which can be distributed on the blockchain. And that doesn't exist yet. Here in Switzerland, you have, again, the sort of a CMTA equivalent, which still has an arguably very remote risk. But once you take that risk out, then I think we'll see a much more flexible basis, a much more secure basis to be able to issue confidently on behalf of the corporate debt and equity instruments. Let me move then to slide 10 and talk a little bit more broadly about use cases that we're seeing across asset tokenization and corporate finance. And I've got three buckets set out here, three kind of constellations, if you like, and use cases. And which ones are jumping out? Because, you know, tokenization, you can take pretty much anything, and people tend, you know, we get a lot of people who want to tokenize anything, you know, their balcony or their cat. And really quite some nutty ideas. And really here, you have to peel back and look at what is the underlying investment opportunity, what are the characteristics, what's the quality of the issuer, what is the substance of the legal and regulatory basis upon which they want to issue this asset. All these things, of course, remain the same. Wrapping the token brings features, and then, as I've discussed a bit earlier, helps distribute it into new ecosystems. So on the left-hand side, I think in the bottom left, and is the subject of today's discussion, is a little bit around financial instruments. So I've covered those a little bit on the equity side and the fixed income side. Real estate, I think, is a huge area where people are looking with literally hundreds of different use cases in bringing liquidity into real estate, whether it be liberating liquidity. There are use cases around bringing direct investors into mortgages, so retail mortgages, which here, Switzerland and some countries in Europe, are all deposit funded more or less from the big banks, who are you know, funding their assets through short-term deposits, but have long-term 10-year plus fixed-term commitments. We can do direct solutions there, and that's super interesting and a really good use case. Property management, you can also bring in an additional value-added service on the tokenization on top of the financial investment. So that area is certainly one that we're focusing on a lot. On precious metals, precious metal commodity tokens, gold in particular, everyone's got a gold token. So lots of people talk about gold tokens, but we've got one or two which bring a very, very unique element of refinancing within the refining period. And I hope to have that one ready actually within the next 6 to 9 months. And has a very strong ESG element. So from a, let's say, a branding perspective, SEBA is trying to position, or we're positioning ourselves very much in these types of use cases where you can bring a financing element and bring the asset tokenization capability in to deliver something which has, you know, strong principles, has an ESG flavor. So in gold, for example, we're creating something which would allow an investor to choose to invest in gold, but they know exactly where that gold has come from, which mine, which region, and to where it's going. So where is that gold used? Is it used for industrial purposes, or more likely silver in industrial purposes? Is it in the fine art, or is it in jewelry? And you can choose that, and you can allocate and create your own portfolio around your sort of principles and ESG priorities, which I think is fantastic. On payment options in the middle, I already touched a little bit on the CBBC experiments that we're working on. So I think this transition from fiat to digital, from a central banking perspective, central bankings who are running out of steam, who are arguably not providing all of us savers any protection against an inflation threat. And so I think they're realizing now as well that the world is moving towards digital currencies, and that's a huge challenge for them to get their heads around how to design it, how to manage it into the commercial, so public versus private world, and issuance of use of stablecoins and digital currencies. So that's where, again, we're playing a part, and we're supplying liquidity into some of these networks. And then on the right-hand side, there's another couple of really interesting use cases, and this is where people talk about art and people talk about copyrights and intellectual property rights. And those things are previously relatively illiquid, and so bringing a liquid asset into a liquid state, fractionalizing it, that's a good example of fractionalizing, and helping to create a solution whereby things become investable and transferable and secure against the underlying, so the provenance and so forth. That's a great use case. And there's one or two that I'm working in there, which I think can have a really good impact on the industry. So just to kind of wrap up a little bit, I thought I would just go through a couple of these use cases and explain one or two more, and where we're seeing the most interest. So there's just a short breakdown here on the left here at SEBA in terms of our digital corporate finance practice. I mean, we're getting around 5 very serious, very interesting new asset tokenization cases every month. There's probably 20 which are of questionable, let's say, substance. And where are they clustering? Well, there's a lot of activity around fund tokenization. So large-scale equity funds, individual underlying securities. I think there are many players globally who are trying to solve that process of instant clearing and settlement, and that can take out, I think, up to 100 basis points in initial costs, the in price, and probably 50 or 75 basis points potentially in the ongoing management fees in that process of funds, and that's obviously a huge global industry. That one I think will take some time because it's still legal and regulatory driven, but the tech process is going well, and we're in touch with quite a few players across different jurisdictions, particularly in Asia, who are developing those solutions. Commodity financing, I mentioned, we actually have quite a few more than those. They're on the screen. Digital currencies and stablecoins. So cross-border remittance and payments is a huge one, and we're working, which is publicly announced, with a firm called LightNet, and LightNet is creating a payment and remittance network in Southeast Asia, which is around a 40 billion opportunity, where foreign workers are earning in a certain country and they want to remit funds back to their families. This is something where sometimes 6%, 600 basis points of cost is taken out to be able to provide a new infrastructure which gives them a much more secure method of repatriating money back to family instantly and securely at a very low cost is something which is a fantastic use case for us, and we're working hard on that one. There were 2 or 3 other cases like that going on, and Libra, of course, is one of the most popular, most visible, and I think it's fantastic to see them starting to continuing to work very actively in deploying their use cases in many different jurisdictions, and we're in touch with them as well. On the capital market side, again, on primary issuance, private markets, private placements, we get quite a few of those where you have an innovative technology. Someone wants to raise money to deploy that technology into a certain use case. So we have one in a very innovative flooring system, which is based on magnets, and they can deploy that into many different use cases, but they would like to try and create financing which is tied very much to the deployment channel or the sub-industry channel of that use case, and that's where we're coming in to help them create a tokenized version which can wrap around each one of the deployments and has different dynamics, different valuation parameters, and then from a securities perspective, we at SEBA can also take those different tokens, we can sell them to people, put them in their portfolios, they can leverage them, they can create structured products. So it's a super interesting area. In music and entertainment is the final case I'll mention before I wrap up. That's currently my favorite use case. I think we can all see that the music industry and actually royalties from music is one of the most stable revenue streams on the planet. And to be able to take that and securitize that essentially and wrap it in a token and doing so, make it investable, but I think more importantly, connect the artists, the original artists who deserve those payments with the money which is currently not getting to them. So I heard yesterday or the day before that, for example, the collection agencies who collect money on behalf of artists and distribute it back to the artists from the Deezers and Spotify's and Apple Music of the world. Last year in Germany, one of these collection agencies had $7 billion euro, 7 billion euro undistributed because they just could not find the end artist. And I think that's really a tragedy. And so for the music industry, this is something which we're hoping very soon to connect with an innovative blockchain solution with on a tokenized platform. And that's a huge cost block to take out. So that's a terrific example of where we're trying to work here at SEBA. So thank you very much to everyone who's tuned in today to listen. I hope that has been in some way interesting and to some extent insightful. And I'm very happy to take any questions that anyone might have.
Excellent. Thank you, Matthew. And we have received a few questions, so I'll just kind of go down the row here and maybe combine a few. So first off, somebody says, good afternoon, and thank you so much for your very insightful presentation on the overall market in SEBA in particular. They have just relocated from Singapore, where the regulator there has taken a very proactive approach towards innovation. And they're wondering, what's your view on FINMA's approach to further supporting the ecosystem? And maybe in addition to that, to combine with another question, could you give us some insights into how SEBA has been working with FINMA?
Okay, that's very interesting. So on the FINMA side, FINMA is a very progressive regulator, I would say, and I've dealt with a lot of European and Asian and US regulators. They're very supportive. They've issued 2 such licenses, one to us and one to SIGBAN. And I think they are very, very supportive of development in blockchain. And here in the so-called Silicon Valley, down in Zug, outside Zurich in Switzerland, there's a really terrific ecosystem going on in blockchain, in digital assets. And the FINMA is actively involved in a lot of these forums. They're very supportive, very consultative with these. So I think it's a very good place to do business if you're into this type of technology in this space. Singapore as well, the MAS, you know, we're intending to secure a CMS license, capital markets license, and a payments license next year. And they're also very progressive. I think you need to show a little bit more track record before you can move to a bank, which I think is appropriate as far as the MAS is concerned. But I think the MAS is also very progressive. I think they are cautious when it comes to crypto only or crypto focused firms, but when it comes to broader digital companies, the MAS and the FINMA are not dissimilar. And I see in conversations with those 2 regulators on similar topics, they often have very similar opinions. So it's a good rail, if you like, between the 2 jurisdictions for SEBA and others like us.
Great, thank you. Adding to that, someone asked if you could talk a little bit more about the type of banking license SEBA is operating with.
Yes, we have what's called a Swiss universal banking license. So it's a securities dealer's license. And so that enables us to do, again, if you just think about UBS and Credit Suisse, we can do, in principle, a license allows us to do any type of banking. So retail banking, commercial banking, investment banking, wealth management for all client segments. So it's the broadest license that you can secure.
Thank you. We have some kind of practical questions here. The first is SEBA's tokenization offering live, and who are the services available to?
Sure. So the asset tokenization is live. It's provided, we have 2 providers. The current one is Tokensoft, an American firm, but they're set up here with us as well. They do the technical tokenization process, and they're fully integrated into our booking platform. So it's going live really from end of last week in terms of its full integration. So we can issue a tokenized security, we can book it, you can see it on your statement, you can trade in and out of it, and so that's as live as it gets. But it's still very new. So we hope to come out with our first security token issuance within the next few months. We also have another firm called Taurus, and Taurus is a European firm based here in Switzerland as well, and they provide similarly a software called Taurus Capital, and Taurus Capital is integrated with another software called Taurus Protect. Taurus Protect does the HSM hot wallet, and so we're also looking forward to welcoming them into our infrastructure as well. So we would have multiple providers of the tokenization.
You spoke a little bit about the kind of the industry and trends broadly, and someone asked, would you say that the pandemic, or how would you say the pandemic is impacting the development of these technologies?
I would say it's certainly forced people to, and I think this is a general statement, but people have certainly been forced to work remotely and electronically more than probably anyone ever expected. And I think that's also proven the resilience of our bank and our digital stack. So we found that even in the height of COVID, when there were broad-based lockdowns, we were able to work completely remotely, apart from one small element in the private key ceremonies where you do have to have a physical presence to come into the cold storage. But otherwise, even market making 24/7 from home worked perfectly. So I think that really proved that a firm like ours is pretty fit for purpose.
Absolutely. Someone else asked, how is tokenization being received by investors, and is it attracting new investors into markets?
I presume that's investors in products rather than investors in products. I think people are really super interested. They of course want to know what's in it for me. Why would I buy a security token? So assuming they have the app and they can receive, pay, and trade into this tokenized security, is it cheaper? Has it got better features? Sorry, 1 second. I'm getting bombarded. Yes, they're looking for better features, and so here, there are certainly some strong additional features that we can provide, and that's the only basis that you're going to attract people into investing. Tokenization by itself is not value add, as far as I'm concerned.
Right. Well, thank you, Matthew, so much. I want to be cognizant of your time, since we're coming up on 10 to 5 where I am. But in any case, we have had people also ask if you'll be sharing the deck. What I can say is we'll share a recording of this webinar with everyone so you can watch. And thank you so much, Matthew, for joining us. We'll also distribute links to SEBA to learn more. We've had a few people also ask how to get in touch with you personally, so we'll share the SEBA contact information.
Perfect.
So,
that'd be great. Yes.
Yeah, absolutely.
Great. Yeah, and thanks to everyone that joined. And yes, absolutely. Please do get in touch anytime on any topic.
Brilliant. Thank you so much. And just since Matthew mentioned, next week our virtual members forum will be with Six Digital Exchange, who also came up during today's presentation. So thank you, Matthew, so much for your time. We so enjoyed hearing from you. And just in the chat, everyone, thank you for this great presentation. Thank you for answering our questions. So
thanks, everyone.
There'll definitely be some follow-up.
Have a great day.
Bye-bye.
Terrific. Bye.